We've got Todd Schoenberger, Managing Director at LandColt Trading. He's here with us for the entire hour. And, you know, Todd and I were just chatting a little bit off camera, and I was telling him all the reasons why I thought this market really was on a tear, as you heard me just talk about. A slow but steady tear. Todd feels a little differently these days.
Absolutely. Look,
why are you worried?
Well, how can you substantiate this rise? First of all, every trader on the street was counting on a quantitative easing package. We already heard from the chairman last week that that's not going to happen. If it was going to happen, it would have happened probably in the third quarter.
Yeah, but hey, maybe that's a good thing, Todd. Maybe that's a good thing. We don't need it because we've got an economy that's better.
Okay, Trish, then look at the flip side of this. Earnings. Where are the earnings going to come from? Last earnings period, 64% of S&P 500 companies beat that bottom line number. That was on a lowered estimate. The historical average is 62%. Where are the earnings going to come from? Revolving credit's going down. Consumers are obviously not shopping.
Well, I don't know that about the consumer. I mean, I actually think the consumer has a lot of strength. Gas prices, of course, being the wild card out there.
Correct.
You know, $110 a barrel oil. I don't know how much we can stomach that.
We're still below 4. Remember, Stephen Schork makes a point. Stephen Schork, very widely followed. He's got a newsletter, the Schork Report. He makes the point that if you get gasoline above 4, like to 4 1/4, then you really have a problem. But up to 4, we can handle it.
Yeah, guys, but jobs, right? Doesn't it come down to whether or not people are employed? If they got more money in their pocket, then they've got more money theoretically to spend.
But even the people that are, look, you look at the last 3 prints, over 200,000, but they're the low-income variety jobs, though, Trish. Where are the jobs coming from? First of all, where are the high-income jobs coming from? Look, you're not seeing that right now. And even if you do get a job, it's at lowered salaries right now. Look, a guy making 200,000 now is making 75, or 75 he's making 35. Those are the people who are not buying homes and not buying the real expensive cars.
Okay, we got lots to talk about this.
Oh, no doubt.
Really
that is a problem. I tell you, something people are buying, though, the financials. You got to take a look at the outperformance of the financials over the past couple of weeks. Obviously, the banks passed those stress tests. Take a look at this, guys. 7.25% in 1 week.
Yeah, that's like a relief rally, right?
Yes,
people say, whoa, they got through those stress tests.
3% for the S&P.
Maybe they'll make it through this European debt crisis, maybe, and that's boding well for the banks.
Nah, good luck with that. I don't know. I mean, look at the big countries all together. You have $1.5 trillion of European debt right there, and you still have $500 billion that's held by the money center banks here in this country. If there is a default, if anybody has to start erasing 50, 70 cents on the dollar, those bulge bracket banks...
Yeah, but these guys are hedged. These guys are hedged. You know, the net exposure is lower.
Look, it doesn't matter that they pass the stress test. It's not going to improve lending, obviously. It's not going to lower the criteria. You're still going to be challenging to get any type of a loan from any big bulge bracket bank right now. So that's great that they pass the stress test. Whoopee. That doesn't do
you just told me that
doesn't do anything for me.
Did you just say non-revolving credit and revolving credit?
Look, you still have deleveraging that's taking place in the American household right now. The debt-to-income ratio in this country is 1.2 to 1. Americans still owe $1.20 to creditors for every dollar they're receiving in income. It was 1.4 to 1 before the crisis in 08.
Historically, though, that ratio has been above 1 for decades.
Correct. Very well, you could say that, but however, you still have some type of deleveraging that's taking place. You have revolving credit that's going down. People are not able to borrow to go out and spend. So if they don't have the cash, how are they going to spend? And that's my whole logic, where the earnings going to come from in future quarters, guys.
Just turning negative over the last 10 minutes. Shares traded as high as $10.10 a share today. Now down about 10 cents, a loss of a little over 1%.
You know, think about that, Trish. It was only a couple of months ago that it was down at $5, and we were talking about a discount to cash, which is about 7 per share, a double from there, if you had the guts to buy it.
That's right. And don't forget, though, I mean, I always look at that break-even point for Warren Buffett, 714. It's his cost basis on this. Guy's still making a lot of money.
Yeah, he sure is.